speak. Today I'm joined by Roopam Asthana, a veteran of insurance industry, former MD and CEO of Liberty General Insurance. Thank you so much, sir, for joining us today. So from you today, we would like to know nitty-gritties of motor insurance because motor insurance is a very big segment. Many of us are directly or indirectly related to the motor insurance when we buy our new cars, when we renew our vehicles. So to begin with, when we go to buy a new car, recently when I bought a new car, the dealer told me, sir, you have to buy the insurance from this company only because with new car insurance is mandatory. So just want to understand, am I supposed to buy the insurance from dealer only?
So Anurag, the very simple answer to this is no. It is not mandatory that you purchase insurance from the dealer only and from any particular insurance company. In fact, what I would strongly recommend to your viewers who are going to be purchasing new cars or two-wheelers for that instance is they should actually look at getting quotes from 3 or 4 main insurance companies in India and also probably try and compare the quotes from some web aggregators that are available in the market, so that they are very well aware of all the options that are available to them. And after those options, they can then decide what to do.
So it's not mandatory to buy insurance from dealer only, but at times the dealer will not agree. They will say, no, sir, you have to buy from us only. It's a mandatory. So how to get away from that?
So I think the way it works usually is that you push back the dealer and give them the quote that you have got from another insurance company. Either they will try and match that quote or give you the availability and the freedom to go ahead and get your insurance from another insurance company.
Okay, so
most often what we see is that most consumers and most customers who are purchasing new cars don't even question the dealer.
Okay, so you have to question the dealer.
Yes.
And if you will question the dealer, there is a high chance that your premium may come down.
Yes.
How much means their margin is always there, so that the benefit car owner can take, the vehicle owner can take?
So actually, there is usually a difference. Now, the quantum of difference varies from dealer to dealer and company to company and depends also on the coverages that are being offered. But there is a substantial amount of premium difference, and actually what I would suggest is that even if you are willing to pay that extra, you should be able to get additional coverages with that extra premium that you're paying.
Okay.
So the point is that the consumer needs to take benefit of all the insurance coverages and also get the best price for it. And that should be the ultimate objective of the consumer.
Okay, sir. And sir, while buying motor insurance, what other add-ons one should check for sure that, okay, you are going for a motor insurance? Because at times there is a huge difference between two companies, two quotes. And normal, ordinary policy holder is not aware that, okay, why there is a huge difference, and they end up buying the policy which is of a lower insurance premium.
So I think the first thing which I would strongly suggest to consumers is that when they go to buy insurance along with a new car, check the policy that they're getting. What are the inclusions? What are the exclusions? Most often, what I have noticed is that most consumers don't even check the insurance that they are buying. That's number one. Number two, what we have to see is that the consumer is able to get a larger protection for the amount of money that they're paying in premium. So let me give you a simple example of some of the add-ons that are actually could make a big difference when the consumer, in the unfortunate incidence of an accident goes to claim. So for example, the moment your car goes out of the showroom and unfortunately gets hit or has an accident, there is a depreciation of 50% that is charged on all rubber parts, plastic parts, and glass parts. So if your cost for replacing or repairing them is 100, all you get is 50 rupees.
Okay.
But if you buy zero depreciation, or sometimes it's called bumper to bumper, or sometimes it's called nil depreciation add-on cover, then even that depreciation gets covered.
Okay.
So that is something which the consumer must seriously look at. It comes at a little bit of an additional cost, but I think this is a really value add as far as...
So for motor policy, go for zero depreciation policy.
Zero depreciation is the first thing that... The second thing is that if you look at the insured declared value, which is the sum insured for your insurance...
IDV.
IDV as it's popularly known. the moment your car goes out of the dealership, its value drops by 5%.
Okay.
Right? So in the ex-showroom price minus 5%. So your sum insured drops. Now, if you are in an unfortunate situation, within a few days your car gets stolen or it's a total loss, you would tend to lose that. Right? So there is another add-on which is called return to invoice. What that does is that gives you the ability to actually, in case of a total loss or theft, to go back to the invoice value and claim the amount which is the invoice value. So that's another one. The third thing which is which I would strongly recommend, especially these days with monsoons and flooding, etc., is engine protect cover.
Okay.
So, for example, if you're driving your car and there is an ingression of water, it goes into the engine gets completely jammed, and to repair it is very, very difficult, and most probably it will have to be replaced. Now that does not get covered in an ordinary policy.
Okay.
And therefore you have an additional add-on called engine protect. Okay. Which is what you need to get.
That is part of the consumable engine protect?
No. So
okay.
Consumables is another add-on cover.
Okay.
Right? So consumable is another add-on cover, but that is something which is of lesser consequence. I mean, engine is the heart of the car, right? So to protect the engine is probably very, very important, and therefore the engine protect is another cover which I would strongly recommend.
Okay. So sir, if the normal premium is 100 rupees, and if I go for a zero dep, how much premium will increase? Then again I go for a return to invoice, then how much more add-on will be there, and with the engine protection, overall premium will increase how much?
So I think the way to look at it is that different companies will give you different rates for this, but the increase in price or increase in premium, if you take a package of all of these, is not very substantial. We're talking of 15 to 20% of the premium which would have been charged to you otherwise. So, for a very little cost, you actually get much more coverage and protection for your vehicle. And that is something which the consumer, so which is what I was saying, is that if you're able to negotiate the premium, for the savings, you can buy these extra add-ons. Okay. And actually get your larger protection for your vehicle in case of an unfortunate situation.
Okay. And sir, that return to invoice add-on, you have said that is for the first year of renewal only, or for second year, third year?
It can be for other years also, but the advantage of that is much more in the initial years of purchase. So when it's a new car, it makes a much bigger difference because the IDV keeps dropping over a period of time. So when a new car, it makes a lot more difference. But as the car gets older, maybe you could do away with that add-on.
And so what are the other add-ons in motor insurance policy which one should be aware of and can buy for a vehicle, for your car, for your two-wheeler?
So there are a couple more. You talked about consumables, yes. Right? So consumables are usually not covered when you claim under a normal comprehensive insurance policy. So consumable cover helps you cover those costs. The other, which is very important, which is again not something which is very commonly known, as a tire cover, right? So,
okay, tire cover.
So now, if you buy an expensive car today, your tire could actually cost you 1 lakh or more than 1 lakh rupees, a single tire, right?
Okay.
And if the tire gets, there is some problem with the tire and there is it goes over a stone and gets cut, it's not covered under a normal policy.
So my final question would be related to the no claim bonus. How one can avail the benefit of no claim bonus, and during the minor repairs, it is advisable to take claim or not?
So this is very important topic, Anurag, and this is again something which consumers tend to overlook. Now, how does a no claim bonus? What is no claim bonus, first of all? No claim bonus is basically an incentive given to an insurance policyholder for not claiming any amount in that particular year. So if you don't claim in the first year of your policy, you get a 20% discount on renewal.
Okay.
That keeps increasing every year. So 20, 25, 35, 45, and after 5 years, it goes up to 50%. So if you haven't claimed for 5 consecutive years, you could actually get 50% discount on your insurance policy, right? So the amount keeps increasing, of discount keeps increasing. Now, as a consumer, what you have to see is, if I have a small claim, and which is the amount is less than the amount of no claim bonus, then it doesn't make sense for me to claim that, right? Because I would lose my no claim bonus if I was to take that small claim. So be aware of the advantage of no claim bonus and compare it with small amounts of damages which you may want to bear yourself, so that you get the full advantage. Because only do you lose that year's no claim bonus, but subsequent years also, comes down, right?
Okay.
So no claim bonus is a very, very crucial bit which consumers need to be aware of and take advantage of. This is something which the insurance companies offer in terms of value, and one needs to take advantage of it.
Okay. And sir, for the minor repairs, one should avoid taking claims?
Yes, so do the calculation. If your no claim bonus for the following year is 100 rupees, right, and your repair is only 20 rupees, then you would actually lose that 100 rupees benefit if you claim for 20 rupees,
Certainly,
right?
sir.
So be a aware consumer, and do these simple calculations. They are not very complex, not very complicated. Do these simple calculations and then take the decision.
Thank you so much, sir. We are running short of time, but you have shared very minute details about the motor insurance that one should keep in mind while buying a new car or while renewing our motor policy. Thank you so much, sir, for talking to us in our Insurance Mantra show. So that's